It all started several years ago when I was first learning about investing. I bought this book called One Up on Wall Street by Peter Lynch. Now, who is Peter Lynch? Well, he used to run this fund at Fidelity called the Magellan Fund, and he's legendary in investing because he compounded money at over 20% annual returns for over a decade. I first read this book many years ago, but a few weeks ago, I was thumbing through it just kind of casually looking to see what kinds of insights I could gain from it. And I came across this passage which changed the way I thought about investing forever. You see, once I read this passage, it sent me off on a journey for a couple of weeks, and I could not stop thinking about this one thing. You see, there's one stock that Peter Lynch mentions in this book that he puts above all others. And I'm gonna read it for you right now. And I quote, "And how about Masco Corporation, which developed the single handle-ball faucet, and as a result, enjoyed 30 consecutive years of up earnings through war and peace, inflation and recession, with the earnings rising 800-fold and the stock rising 1,300-fold between 1958 and 1987. It's probably the greatest stock in the history of capitalism." What did he just say? He said the greatest stock in the history of capitalism. I'm looking through this book and I'm realizing, whoa, that's pretty much all he says about it. But he doesn't say anything else about why he believes this is the greatest stock of all time. So then I thought, wow, Peter Lynch, if this stock is that good, then I understand you had a lot of other things to say in your book, but man, you're making a big claim, greatest stock in the history of capitalism. So I said to myself, I need to find out what is behind this Masco Screw Company. And then I thought to myself, wow, if Peter Lynch is willing to make a claim like that, then it better be good. We live in a world where companies like Alphabet, Tesla, Microsoft have increased many fold for investors and made a lot of people very wealthy. And the thing is, in this day and age, it actually bothers me sometimes because I feel like all people talk about on YouTube or in blogs or in articles are these big stocks that you always hear about. And yes, I'm looking at you, Microsoft, Tesla, Amazon, Google, Meta, Apple, Salesforce, Alibaba, Nvidia, AMD, Shopify, Visa, PayPal, Walmart, MasterCard, and more. You know what I'm talking about. Everyone always talks about these same stocks all the time. This is because of a mental model called availability bias. Because we see these stocks in the present day, we tend to look at them as the only examples of companies and stocks that have succeeded. And therefore, we base all of our investment decisions and our framework for making investment decisions from that set of examples. That's why I'm so motivated to bring to you on this channel ideas and opportunities and lessons from stories in the past, because we can glean so many lessons for how we invest for the future. The more ideas we expose ourselves to, the more insights we can ultimately have. So let's go ahead and get into it, and let's talk about the greatest stock of all time. The company Masco Screw is now currently known as Masco Corporation. And you could look this up in Yahoo Finance or Google Finance right now, ticker symbol MAS, and you would find that this company does indeed still exist. The thing is, though, if you looked at the returns of this company in the recent past, it isn't really that impressive. It doesn't really seem to qualify as best stock ever territory to me. So we have to look deeper. It all started with a man named Alex Manoogian. And Alex was an immigrant from Turkey. He actually came over to America in 1921 when he was just 19 years old. And he had nothing to his name other than $50 in his pocket, but he wanted to make something of himself. Now he moved to Detroit and he worked as a machinist. And over time, he built up his savings enough to purchase 2 screw machines and started his company, the Masco Screw Company. And he supplied the auto industry with parts. The country was starting to come out of the Great Depression around this time, and the auto industry was starting to boom again. So between 1936 and 1942, Alex was able to build his company up from $100,000 in annual sales to over $1 million in annual sales over that period of time. And that's a 46% annual rate of growth in revenue. So very fast growth here. It was around this time that Masco started diversifying outside of just the auto parts business. And in 1958, Alex Manoogian bought the rights to an invention for a single ball faucet. Now you see, around this time, the only types of faucets that existed were ones that had 2 knobs, basically. One that provided hot water and one that provided cold water. But Alex saw this invention and saw a lot of potential in it. He realized that this mechanism could be used to get both hot and cold water at the same time from a single faucet. All you would do is turn it one way to get hot, one way to get cold. Now, the company tweaked the design a little bit and made it more robust, and they renamed it the Delta Faucet, and thus the Delta Faucet brand was born. If you're enjoying this so far, it would mean a lot to me if you just show me some love and just tap that like button. Thank you so much. In the 1960s, 70s, and 80s, housing generally boomed. And guess what houses need? They need faucets. You need a faucet in the kitchen. You need faucets in the bathroom. The Delta line of products really shone for the company during this time, and they sold many, many faucets. They innovated with different colors, different finishes, and they were the first faucet brand to ever be advertised in print. Who would have thought that this single-handed faucet invention from Masco, allowing water to change from hot to cold and back again in a single motion, would make millions of dollars for the company over the course of decades? I mean, it looks like such a simple device, but it's really incredible. Now, over the decades, the company actually diversified into a lot of other different product lines, things like furniture and other types of home fixtures. But their main seller continued to be the Delta Faucet line. And in the 1980s, they even developed the first ever kitchen pull-out faucet. Now, this is the end of the period when Peter Lynch said that the stock returned 1,300-fold, or the equivalent of 13,000%. But what I wanted to know is, okay, I understand that the faucets increased the earnings a lot, and that's why the stock rose, but I wanted to actually verify that for myself. I mean, we could end the video right here and just say, yeah, this was a great stock because they capitalized on a booming housing market, but what actually happened underneath the hood? So I traced the stock's entire history from the moment it became publicly traded on the Detroit Stock Exchange all the way through to 2022, which is present day as I'm recording this. And here's what I found. Starting from the beginning, we know that Masco Screw Products was created in 1929, and that was the origin of the corporation. Well, after that, they ended up trading on the Detroit Stock Exchange and then later the New York Stock Exchange between 1961 and 1962. The 1960s apparently were very kind to the stock. But in the 1970s, there was a major bear market that impacted the entire market, and Masco stock was no exception. The stock actually fell by 56% in the 1973 to 1974 bear market. Now, we know this drop happened because from my research, the valuation actually collapsed from 46 times earnings to 20 times earnings, which was very low for a high growth company. Now, the stock market eventually recovered, and so did Masco stock. But let's look at what happened next, because some very interesting things started happening in the 1980s. In 1984, the company executed two spin-offs and split into three parts. First was the Masco Corporation part, which remains Masco, and then it spun off a company called Masco Industries, and they put some of their businesses in that segment. And then there was another spin-off called TriMas. And the reason it was named TriMas was Tri stands for three, and it was the third Masco. By 1986, you would have had a 139x gain on this stock if you had held it from the date of the IPO. And what this is equivalent to is a 13,900% gain in the stock, which is absolutely incredible. But the story doesn't stop there. We have to look at what happened to the corporation next. Now, after the spinoff, some interesting things happened. Masco Industries ended up renaming itself to Masco Tech. And then in 1997, it acquired the other spinoff, TriMas, to reunite those parts of the business. Now, 13,900% return is incredible. But what I really wanted to know was, how much would you have made if you just held this stock forever? How much would you have made basically if you held the stock to today? Well, the answer is not so simple, because you can't just look up the Tinker Simple MAS in Google and find the stock history. It only goes back so far. So we have to dig deeper in order to understand how much investors really made. Now, after Masco Tech acquired TriMas in 1997, they ended up getting bought out themselves by this private equity group called Heartland, and they acquired this business in 2001. Now, after the Heartland acquisition, they renamed the company Metaldyne, and then in 2006, it was acquired by another company called Asahi Tech, which was a Japanese firm. But they didn't take the whole business though. the business was actually split into two, and the TriMas side of the business actually got acquired in the same year by a company called American Securities, which is a private equity group. Let's pause right now to reflect on what's going on at this point. So we have the main Masco Corporation that's still doing its thing, and then we have American Securities that bought this business, the TriMas business, and then the Asahi Tech Japanese business bought the other part of what was Masco Tech, renamed to Metaldyne. So we have only one publicly traded business at this point, which is Masco Corporation. The other parts of the business now belong to either the private equity group American Securities or Asahi Tech. Now here's where things get even more interesting, and actually things get shaken up a little bit. In 2007, that company, that private equity group American Securities, they decided to spin out the business they just bought, TriMas, and 1 year later in 2007, TriMas, ticker symbol TRS, becomes publicly traded on the stock market. Several years later, the company Asahi Tech decides, you know what, maybe we could sell this business. So in 2012, they sell Metaldyne. And who bought Metaldyne? Well, it was actually that private equity firm, American Securities, that we just mentioned. So they acquired the Metaldyne business in 2012. And what did American Securities do? Well, they did the same thing that those guys did with TriMas. They IPO'd the company, and they called it this time Metaldyne Performance Group, ticker symbol MPG, and this happened back in 2014. Surely that's all that happened, Alex. It couldn't get any more complicated than this, could it? Well, actually, it does. What happened next is this. TriMas decides in 2015 that they want to split off one of their businesses. So they spin off an IPO called Horizon Global, ticker symbol HZN. And then in that same year, good old Masco Corporation decides to spin off one of its businesses called TopBuild, and it gets spun off as its own independent public company, TopBuild, ticker symbol BLD. In 2017, a publicly traded company called American Axle Manufacturing decides to buy out Metaldyne Performance Group. And this, my fellow investor, is how corporate America actually works. We now have 5 separate businesses that originated from that one single business, Masco Screw Corporation. So nearly a century after the original business was founded, we end up having 5 businesses that all happen to be publicly traded that exist in today's market. You have the original Masco Corporation, ticker symbol MAS. You have TriMas, ticker symbol TRS. Horizon Global, ticker symbol HZN. TopBuild, ticker symbol BLD. And American Axle Manufacturing, ticker symbol AXL. Great. Now that we have all that research done, we can begin to build things back up and put the pieces of the puzzle together to understand what the real returns were from the very beginning of the corporation's history to today. Because as an investor, I want to know, what were the real returns of holding this business? And is it really the greatest stock of all time? Can we verify it? Now, in order to do this properly, I'm going to share my assumptions with you so you can follow how I actually came up with these numbers that I'm about to share. Now, first of all, I'm assuming that in 1961, you or one of your ancestors put $1,000 into Masco stock, the original Masco stock trading on the Detroit Stock Exchange. And in order to get that information, I actually had to look up some old newspaper data. And what I found was in the week of December 15th, 1961, this stock could have been purchased between $20 and $26 per share. For the sake of calculation, I assumed that you would have been able to buy at the midpoint, right? Somewhere around $23 per share. So that's the number that I used. Here are my other assumptions. First, I'm assuming that you're just letting your dividends pile up as cash. You're not reinvesting your dividends. Another assumption is that you're keeping all of your spin-offs instead of going out and just selling them. You're keeping those. And then another assumption is that any money that you receive from buyouts, I'm assuming that you reinvest later when the child companies have their initial public offerings. All right, with that being said, let's see how much you would have made. So I track first the track of investment coming from the main Masco Corporation. And so the company went public in 1958. I'm assuming that you purchased some shares in 1961 at $23 per share, and you bought $1,000 worth. Now that would have gotten you about 43 shares. And then over the course of time, we know that there were a lot of stock splits in Masco's history. Now, I wasn't able to find exactly when all of those stock splits happened. Again, this was back in the 60s and I just couldn't find the data. But I did assume also that those stock splits were 2-for-1, which is pretty typical, especially for fast growing companies. So 2-for-1 stock splits, you had several stock splits over the course of many years. And then we know that around 1986 or so, you had another split, and that would have gotten you to 11,130 shares of the business. Now, the stock was trading around this time for $12.54. So if you multiply the number of shares by the stock price, it tells you how much your money has grown, right? So we see that around that time, you would have had $139,576 out of that investment. Now, this is where you get the 139 return from that I mentioned earlier. You turn $1,000 into over $139,000. That's an incredible return. Later in 1998, a 2-for-1 split, and the stock price actually rose at that time significantly between 1986 and 1998. That would have increased the value of your investment to over $614,000. And then there was another split in 2015. This wasn't a 2-for-1 stock split. It was actually a 1,138 shares for 1,000 share split. So that would have actually increased the number of your shares, but the stock price went down over that period of time between 1998 and 2015. So you actually lost some money there. You had only about $600,000. Now, fast forward to today, from 2015 to 2022, that stock price is now over $53.78 per share. And if you look at the number of shares that you would have owned around this time, 25,333 to be exact, guess what that means? You have over $1,362,402, and that's off of a $1,000 investment. Now, that's just the value of the stock price, Masco Corporation itself growing over time. But what about the dividends that you were paid out? Now, I wasn't able to find the entire dividend history of Masco going all the way back to its early history, but I was able to find the dividend history up through the 1980s. So let's look at this data. I found the dividend history for Masco Corporation going back to 1989. And what I found after looking at this, we can see that they steadily paid out good dividends, increasing dividends for many, many years, only lowering them actually, I think during the financial crisis of 2008. Yeah, that's around the time that they dropped it from 20 cents a share to like 6 cents a share in 2009. But they gradually built it back up over time. And if we look at the cumulative dividends paid out over this time frame, it's over $14 and let's see, what is it exactly? $14.52 per share in cumulative dividends. And then, so what I did was I multiplied that amount by the number of shares that you would own in 2022, and that gives you $367,833 in cumulative dividends. For the hardcore math people out there, I didn't account very specifically for all the stock splits as they relate to dividends, but my calculations should be pretty close. Now let's look at the Masco Industries branch of the returns. Like, how much would you have made from this branch? So when Masco Industries was spun off in 1984, I'm assuming that you own 5,565 shares of the original parent Masco Corporation. So then I had to figure out, okay, how much money would you have actually gotten from this spinoff? And through looking at some old SEC filings, I was able to estimate the growth rate of these companies and then back calculate how small they were around this time. And I basically came to the conclusion that I think that around the time of the spinoff, Masco Corporation was about 1.6 or so times bigger than the business Masco Industries that it spun off. And so that gave me a share split ratio of about 5-3. So I'm assuming that these 5,565 shares of Masco Corporation also gave you shares of 3,351 shares in the new Masco Industries. Now, I also made another assumption that this was a taxable event because the original corporation had a controlling stake. So you actually would have had to pay taxes on this spinoff, although a lot of spinoffs happen to be tax-free. So based on those assumptions, with the spinoff, you had 3,351 shares of Masco Industries, and a value of those shares was somewhere around $56,000 or so. Now, I'm assuming that because of the tax hit, and I'm assuming a 20% tax hit, your number of shares actually decreased to 2,681 because you had to pay the government. Now, you have that share count, and remember, the private equity firm Heartland actually acquired the business in 2001. Now, I was able to confirm that Heartland paid $16.90 per share in cash for this buyout. So if you had 2,681 shares, that means that you had a value of $45,305, and that was the cash that you received back at that time. Let's keep it going and look at TriMas Corporation. So when TriMas was spun off in 1984, remember that it got reacquired and became part of Masco Tech. So we've already accounted for that in the ultimate buyout calculation that we just talked about. But let's look at when TriMas IPO'd in 2007. Now, I'm assuming that all that buyout money, half of it was put into TriMas. So I'm assuming that you were able to purchase $22,652 worth of TriMas stock when it IPO'd, which would have given you 2,059 shares at an IPO price of $11. And that's ticker symbol TRS. Now, there was a TriMas stock split in 2015, and it was a 1,255 share for 1,000 share split. And that left you with a value of over $44,246 because the stock was traded higher at that time. Another thing, Horizon Global was spun off in the same year. Now, you received 2 shares of Horizon Global for every 5 shares of TriMas that you held. So that means that you got 824 shares of Horizon Global. So you have a value of those of $13,385. Okay, let's fast forward now 7 years to present day, 2022. How much would you have? Well, the value of your TriMas shares would be $75,000 because TriMas stock actually went up to $29 per share. So you actually made a good amount of money with that. But Horizon Global did not do as well. I mean, it went down in price from $16 per share all the way to $1.38 per share. It's basically a penny stock at this point. And so the value of those shares is now only $1,136. So not very good. Let's go ahead and look at Metaldyne right now. So Metaldyne Performance Group, remember that they IPO'd in 2014. And we see that if you put the other half of your old buyout money into shares of ticker symbol MPG, you would have put over $22,652 into it, which would have gotten you 1,510 shares of that business. And over time, the stock didn't really have much time to grow because it got bought out pretty quickly by this company, American Axle Manufacturing. Now, the interesting thing about this transaction is it wasn't an all cash transaction. A good amount of it was in cash. You actually got $13.50 in cash per share in the buyout, but you also got 0.5 shares of ticker symbol AXL for every 1 share of MPG that you had. So that means you got 755 shares of AXL for a value of $12,836. And then because of the shares that you own, you got a cash purchase price of $20,385. Okay, well, this is great. Fast forward to today, how much money would you have? Well, the bad thing is American Axle Manufacturing has actually declined in price quite a bit. So the stock price per share is $8.66. So not very good. So the value of that would have declined to $6,539. But let's assume that you just kept the cash from the buyout. So you still have that cash there, $20,385. So more or less, you preserved your capital with this branch of the transaction. Now, there is one more source of returns with this investment that we have to investigate, and it's this TopBuild spinoff. Remember, the company TopBuild was spun off from the parent Masco Corporation in 2015. And the terms of that spinoff was that you get 1 share of TopBuild, ticker symbol BLD, for every 9 shares of the corporation that you own. So based on the number of Masco shares that you would have owned that we saw earlier, you would have had 2,815 shares of TopBuild for a value of $64,000. And this was great. This spinoff has actually been very successful in the stock market since 2015. So between 2015 to today in 2022, the stock price actually rose incredibly from $22 per share to over $200 per share. So you almost have a 10 bagger on this one. So that's $64,000 multiplied to over $574,000 by today. And this is just incredible. This exemplifies the power of spin-offs. Okay, so we just spent a lot of time in spreadsheet land. Let's come out now and let's put it all together. What were the total returns that you would have earned as an investor by investing $1,000 into this business many years ago? And is it truly the greatest stock in the history of capitalism? Let's find out right now. We have the numbers now. We can actually calculate it. All right, Peter Lynch, let's find out if you were blowing smoke or not. In order to find out the total return, we simply add up the amount of money that we saw from all of those calculations in order to determine how much we made as a whole. So first we have how much money would you have made from Masco, the parent corporation? Well, over this period of over 61 years of compounding, you would have made $1.3 million, which is incredible. And that's actually the bulk of the return actually stayed with the parent company. Next, you would have the dividends from Masco Corporation. Now, again, I couldn't trace the entire dividend history, but over the last few decades, I was able to get a number over $367,000 from that stream of returns. Next, you would have made money from TriMas. TriMas would have given you about $75,000 worth of return. And then Horizon Global, unfortunately, Horizon Global, that spinoff did not work out very well. You only have $1,137 from that return. Next, we have American Axle Manufacturing. Again, this was a spinoff that just did not do very well economically. So you only have $6,539 from that spinoff. And then you have the cash from that buyout by AXL. And if you held that in cash, you would simply have $20,835 from that. And then last but not least, let's look at this. TopBuild, the spinoff from Masco, the parent corporation, you would have over $574,000 from that single spinoff. In fact, that comprises almost a quarter of your entire return just from that one business. So it's amazing what spinoffs can do. All in all, the grand total, you would have made $2.4 million from a $1,000 investment in 1961. And this equates to a 13.6% annual return over a 61-year period. Now, Alex, aren't there stocks that have compounded over 13.6% annually? Like, obviously, there's a lot of companies that have beaten that, right? Well, yes and no. Yes, in that, of course, there are businesses, stocks have performed at much higher rates of return, 15%, 20%, 25% rates of return. I mean, Amazon compounded at something like 30% annually for over a decade. It's absolutely incredible. But another way to measure return is total return. And the reason that I like total return in this case is because total return accounts for one word: longevity. A lot of the big businesses that have produced amazing returns in the stock market recently have done so over the past 30 years or so. They haven't really been around long enough for us to have a full apples to apples comparison with a business like Masco, which has been around for almost a century and been publicly traded for over 60 years. So even though a 13.6% annual return might not seem that impressive when compared to an annual rate of return of other businesses, consider the total return after accounting for all of the return sources that we just calculated here adds up to over 240,000%, which is absolutely incredible. It's not just how much money you make in the short term, it's how much money you make over very long periods of time. Because we want our wealth as investors to last, right? So we need businesses that can compound for long periods of time, and Masco did exactly that. So after all the analysis, I cannot refute Peter Lynch's statement that Masco is the greatest stock in the history of capitalism. We've seen the total returns, we've done the calculations, and we can plainly see that you would have made a ton of money. Now, is it the greatest stock in the future of capitalism? Probably not, because there are some amazing companies that exist right now that are absolutely crushing it. And I'm sure they will crush Masco's total returns in the future. Now, studying Masco is instructive, though, because we can see what actually caused those returns was a combination of high growth. We had the Delta Faucet line, which really powered its growth in the early years. Then we saw the power of dividends contributing to total return. And then we also saw the power of spinoffs. That Top Build spinoff in 2015 has performed very well for shareholders. So it's a combination of all of these forces working together that actually contributes great returns for investors.